So again, welcome back everybody. Today we are going to be learning chapter 5.4. We're going to be introducing to periodic inventory, but this time we're going to be learning another costing method. It's going to be the Lifo costing method. So chapter 5.3, we looked at FIFO. Now this time we're looking at FIFO. So again, I'm going to repeat this again. The concepts to enter in the data is going to be the same. You're going to journalize the same way. You're going to enter it into the worksheet the same way. And you're going to convert the same exact way. But this time, the only difference is you are going to be calculating your cost of goods sold completely different. All right? And we'll look at the three methods again. So, yesterday we looked at FIFO and how we understood FIFO was the first in or the first to leave or first out. Okay? And I use the grocery stores as an example because when you're buying perishable goods or things that have expiration dates, you want to make sure that you sell out your first batch. If you sell your last batch that you just entered, so the most freshest stuff, all the stuff that you have purchased beforehand is going to all spoil. They're all going to get rotten. And you're going to lose a lot more money towards that instead of just costing it out by first batch, second batch, third batch. Okay? But today we're going to be focusing on last in or the first out. So what this is going to be, so again, think of it as an electronics store. So we're selling laptops. Of course, I'm going to sell the latest model because everyone wants the latest model versus your older models. So I'm going to show you how to do LIFO. All right. So LIFO stands for last in. Last in are the first to go or first out. All right. And we're going to be looking at the same exact formulas as we incurred in the first in FIFO, right? We're still going to have a purchase price, so it's going to be quantity times unit price. We're still going to have a total cost, which is going to include your purchase price plus your freight. And we're still going to incur a cost per item, which is going to take the total cost divided by total quantity. Okay. And then lastly, same thing when we dive in now that you guys recognize what the worksheet looks like. The bottom half is going to be dealing with your goods available and your cost of goods sold, which in this case, we've already recognized what to do and how to do it. So again, when we're dealing with cost of goods available, we're going to add our beginning inventory plus our net purchases to get the goods available. And then lastly, to find your cost of goods sold, you're going to subtract your ending balance from your goods available. Okay, so same exact concept, same exact formulas. Now we're going to start applying it. Okay, so again, here is a given scenario for the following terms. For the following items. Journalize the transaction. So on June 1st, you made a purchase of 100 toys for $1.25 each, and freight was $25. Okay, so let's practice journalizing this again. So how do you journalize this transaction?
June 1st.
Uh-huh.
Subscription would be, I'm sorry. Subscription would be purchase expense,
Correct.
and then the freight, no, freight it would be the credit. The expense would be on the debit side,
Uh-huh.
and then the credit would be the cost, and
Okay, so freight is an expense.
Freight is an expense. Okay.
So it'd be purchase expense, freight expense, and then whatever, whether you paid it or have it on cash.
Accounts payable.
Yes.
Sorry, I interchanged.
It's okay. Yes, so you're going to recognize that you have a purchase expense. You're going to recognize that you have a freight expense. And forever how much you paid for it, you're going to calculate it. So 100 times $1.25 is going to give you 125 plus 25 will give you 150. All right? So same thing as filling it in here as well. So we're going to go ahead, once you know the information, we're going to go ahead and fill in each section. So this time we're looking at purchase expense. And purchase expense, we know it's quantity times unit, which gives us 125. Total cost is going to be 125 plus 25 equals 150. Now we got to do our cost per item, which is 150 divided by 100, and you're going to get $8.50, right? Same exact concept, right? So now what happens when we do our second one? You made a purchase of 100 toys at $1.28, and freight is $26.
Date, June 11.
Uh-huh.
Purchase expense,
Uh-huh.
debit, $128.
Good.
Freight expense,
Mm-hmm.
$26.
Mm-hmm.
Accounts payable,
Mm-hmm.
and then we go to, with the accounts payable, I just got lost on that part. Is there anything that we need to put there?
Yes, we're gonna have to credit for what amount?
Okay, got you. Let's see, 128 plus 26, 154.
Yes, that is correct. So that's how we journalize the second one, and we're going to add it in. Mm-hmm.
Question for you. If it does not specify cash,
Uh-huh.
do we automatically take out the expenses from the accounts payable?
What do you mean by that?
For example, when it comes to after the expenses, there's something that has to be under expense if it doesn't say cash, right? So if it's not coming out of a cash account,
Mm-hmm.
it doesn't automatically come out of an accounts payable.
Yes, yes, yes. So if we don't pay cash, then we're gonna create a liability. Now, for our scenarios, I will be, for the test, um, I will be very specific on exactly how I want it to be journalized. But for this case, we're just trying to understand the concept. So I'm assuming that everything's going to be on account because typically, when you do a purchase or any of those things, normally you would do it on account.
Okay.
But yes.
But just out the gate, if it's not specifying cash, it's
Uh-huh.
a payable account, a liability
Yes,
account.
correct.
Gotcha. I'm grasping it now. Thank you.
Okay. So, yes, and in this case, we're decreasing cash, so it would be a credit. Or if we're increasing a liability, it would also be a credit. So no, yes. All right. So once we enter this into our inventory worksheet again, we're gonna do the same thing. Purchase expense, right? And where we calculate was 128 plus 26 is 154, and if we divide 154 by 100, we should get $1.54. Okay, so this is the one where I actually did a step-by-step process. There you go. So now we got to calculate the total at the bottoms. So we have a total of 200 items purchased. Our total is 253 plus 51, which gives us 304. Okay. Now we take those four numbers, and what do we do with it? We go ahead and transfer them into our table down below. Now we have also recognized that we have 80 items on available on June 15th, right? So we're closing out our books on June 15th. Here we recognize our net purchases, right? We made a purchase of 200 items at 253 plus 51. So that's going to give me a grand total of 304 at 200 items. Now, this time we're going to be looking at how to cost it. So we're going to figure out what the cost of goods sold is. So if you have 200 items and you have 80 remaining, you know you're going to have 120 left. Now, this time we're going to be looking at our inventory a little different. Okay? So this time, since our method is going to be last ones in are the first to our first out, now instead of starting from the top, because that's our first batch, we're going to start taking from batch number 2. Okay, so here we recognize that batch, the first batch that we purchased was $1.50. Now our second batch that we have is $1.54. So this time we're going to be calculating going backwards from bottom to the top. So here I'm going to take my last batch, and we know that it's already 100. So we already know that that's already 154. Okay. Then we're going, once we got rid of this last batch, now we're going to understand that now we have to take out 20 more because we sold a total of 120. But in this case, we only have one batch left, which is the batch that, which was the very first batch that we bought. So in this case, I'm going to take my 20 units, I'm going to multiply it by $1.50, and I'm going to get $30 even. All right? So 154 plus $30 gives you a total of 184. All right? And that's going to be my cost of goods sold. Right? And then that is also going to give us, by subtracting that amount from our goods available, we're going to get that you should have at least 120 remaining. Okay? All right. Any questions there? All right. If you'd like to do it the other way, you could take your 80. If you know that the bottom ones are going to be the first to go, you can automatically recognize that the first batch is going to be remaining. So therefore, you could just take 80 times $1.50, and you could get the same exact answer of 120. Right? So either or, whichever method that you choose, okay, wherever you start, it doesn't matter at this point. Okay, as long as they're evened out, as in they all equal to the goods available. Okay, so here, that's how we calculate our last in or the first out. So again, same exact concept, except this time we're pulling from the bottom and making our way to the top. Whereas yesterday, we started from the top and tried to make our way down to the bottom. Okay? So, understand that. Right? And then notice, I guess, here, notice that by the end of the period, you should still have that remaining balance, which is the this is the wrong one. Wrong slide. It's supposed to look like this one, so I have to fix that one. Oh. I thought I fixed a lot of these mistakes. I have no idea what happened to them. But I need to fix this slide because it's the wrong slide. It's supposed to be the 80 from the top. It's supposed to look like this one. and it's calculated differently. All right, so I will revise that. All right, so then again, once we've done our calculation, we need to complete our conversion entry. And this is where we're going to transfer from our purchase expense and we're going to convert it into our inventory / cost of goods sold. Okay. In this case, we solved for our 200 items, right? But this time, it was going to be for 184 and 120, right? This is what we solved it for this specific LIFO, calculations. This time we calculated as if we got rid of the last batch that we purchased. So in this case, since we've already calculated it, we need to recognize that the very first thing is we need to transfer it into inventory. And if it's a specific inventory, you need to write what the specific inventory is. So in this case, we're going to focus on ending inventory, which was 120. So I'm going to recognize that right there. And the cost of goods sold was for 184. All right. And then we have our purchase expense and our freight expense right there. Okay. Any questions in regards to LIFO?
Yeah, I have a brief question.
Yes.
On the prior PowerPoint slide, you
This-
said LIFO is last in, first out, and
Correct.
FIFO is first in, first out. Okay, so in that last example,
Uh-huh.
I forgot how you determined which batch was LIFO and which batch was FIFO.
Okay, so we'll look at it like a list, right?
Mm-hmm.
So in this case, if we look at that right top right little table right there, my short little inventory table there, I noticed that I made my purchase for the first 100. It's going to be at $1.50. So if I go back to my inventory worksheet, so this one, right? My date is there.
Oh,
So this is going to indicate, well, if I purchase this batch first, because I bought it on June 1st, that's going to be my first batch I have.
yeah.
Whereas the latest one I bought was on June 11th. That's going to be the last thing that I bought.
Okay.
Okay, or the second thing. And when we determine whether it's LIFO or FIFO, FIFO is going to be the first in, first out. So that means I'm going to start from the top and make my way to the bottom.
Mm-hmm.
All right. LIFO says no. You need to get rid of your last ones they're your most recent batches, the one that you last bought. So you're gonna make your way from the bottom and make your way up to the top.
Got it.
Okay. Now there are some reasons to it, and we'll talk about that tomorrow when we actually compare all three. When we compare all three costs, okay? And honestly, it's just when we're costing our methods. I mean, I would recommend for groceries to definitely do FIFO. But again, it's when we compare all three, it's ultimately your decision or the accountant's decision to determine, well, which one's going to benefit my company in the long run. Okay? All right. And we'll talk about that tomorrow when we dive into the last one. All right. But any other questions in regards to LIFO?
Not from my end.
No, ma'am.
Okay. So I do need to fix this slide right here because it's the wrong one. So I will revise this PowerPoint and upload another one so you don't get confused. Okay. So again, we looked at our conversion entry here, and now we're going to focus on the next portion, which is introducing to beginning inventory. So again, same exact concept, but this time we have beginning inventory of 80 units. Let me see if it's correct. At 80 units costing 120. Okay. So automatically we're going to recognize the last thing that we had, which was going back to our inventory worksheet, right? So every time you do this and you close out your books, you're always going to continue right after whatever happened, because this one never closes, right? Inventory is an asset. An asset never closes. So you're going to always constantly know at the end of the period when you actually start your new one. All right? So this is a continuation of the same exact worksheet, except this time we're just transferring a few data, a few information over. So in this case, we need to recognize that we have 80 units and it's going to be at 120 even. But by looking back in our records, right, we know that it's supposed to cost me $1.50 each. Okay, so we're going to take that information and we're going to transfer it in over here. Okay, so we know that we have 80 units at $1.50 and it's going to cost me 120. Now you can also do this if you can't find your information at all. You can always do 120 divided by 80 and you should get $1.50. Okay. But other things that we're going to recognize too is that on June 18th, we made a purchase of another 100 toys at $1.27 with freight of $25. And then on June 23rd, again, thirst, you made a purchase of 100 toys at $1.30 each with the freight of $26. And then on June 30th, you had a total of 60 toys on hand or left in inventory. Okay? So, understanding that, we're going to go ahead and fill in our inventory table again. So again, we're going to put the beginning inventory on the other side of our table, but unfortunately this PowerPoint's not big enough to display everything. So I'm only focusing on my purchases. So here I've journalized, or I'm recording my first batch of 100, right? Going to get for 127. Total cost is going to be 152. And then we're going to divide that by 100, which gives us $1.52. Okay. Then we're going to plug in our second one, which is going to be another 100 at $1.30. And, yes, 156. Which then if you divide by 100, you should get $1.56. So I'm going to go ahead and total up my new purchases. So my new purchases entails is going to be 200 items at $257. My freight is $51. So it gives me a grand total of $308. And we're going to take that information and we're going to transfer it back into here. But this time, we also need to include our beginning balance, which in this case, once we plug in our information into our net purchases, right, we got a 200 at 308. Now, if we look at our bottom portion, now this is where we calculate our beginning inventory. So here we have a beginning balance, and it's going to be for 80 units at 120. We're going to add our goods available, which is our our net purchases, which gives us our goods available, which is going to give us a total of 280 units, costing a total of $428. And here in our inventory, right, we need to recognize that we have now 3 batches, right? We have our 80 from our very, very beginning at the when we started. And then here we have 2 entries here. The second entry is going to be for the 152, and the third one is going to be for the 156. Okay. So understanding now that we have beginning inventory, that means that's going to be at the very top of our batch. But in this case, we are learning LIFO, right? So because we're learning LIFO, that means when we're going to cost our goods sold, we're going to start from the bottom and make our way to the top. So that's just costing it out. Now, because I recognize I have 280 available and I have 60 remaining, that means a grand total, how much did I sell? How many units did I sell?
220.
220 is our correct number. Now this is where we could go ahead and solve for our answer here, which is going to be focusing on the last portion. So in this table, I've included that we're going to calculate the last batch of 100, right, which was for $1.56. So we're going to start from the bottom. Okay, so from here, we're going to start from the bottom batch. Okay, so we recognize that the last batch is for $1.56, and we know it's 100, right? Then this next one we're gonna do is we're gonna go look at our the middle batch. The middle batch is for 152, and we know it's only another 100. So automatically, just by calculating our total sums, we still have to take an extra 20 units out. And we're going to go refer that to our very top of the batch, which is for 150. 150 times 20 is going to give you $30. So here we've demonstrated here of our calculations right here. We're going to add up everything. So we know that 100 plus 100 plus 20 is going to give us our full 220. And this time, we're calculating it backwards, starting from the bottom and making our way to the top. Okay? So, and when we tally those all up, we get a grand total of 338. And then we know that we can get a remaining balance of $90 as our ending balance. Okay? All right. So, again, this is the same exact concept, except instead of starting from the top, we are focusing on starting from the bottom, all right? And when we dive into perpetual, we're going to be constantly purchasing, and you're constantly going to be taking from the bottom, okay? Yes, little FYI kind of thing. But for today, I want you to understand that this is exactly how we calculate last in or the first out. Okay? Any questions in regards to this? And this is with beginning inventory as well.
Not from my end.
Okay.
I'm good.
All right. And then again, lastly, we have to also do our conversion, which is the same thing. We've already calculated the work, so all we need to do is just pull it in towards, pull the pieces of information into our journal. So again, ending inventory, we already knew it was 90. Our cost of goods sold was 338, and then our purchases expense was for 257, plus our $51 of freight. And then lastly, we need to include our beginning inventory, which was for $120. Okay. So, yes. So looking at this, yes. So that's pretty much it. It's the same exact concept that we just learned, except calculating the inventory is different. All right. Chapter review, again, you're going to be looking at how to journalize our purchases, purchase expense, freight expense, and our accounts payable, and then completing our conversion entry, which is going to be your inventory, cost of goods sold, purchase expense, and freight expense. All right. And that is it for chapter 5.4. Like I said, pretty easy, pretty simple. Okay. I'll go ahead and stop the recording.